Hello, and welcome to my channel, Tips to Financial Independence. Today, I'll talk about credit cards and credit scores. What's a credit score? A credit score is a score that lenders use to determine your credit worthiness. They use this score to determine the likelihood of you paying back the borrowed money. The lower the score, the less the likelihood that you pay it back. Credit scores generally range between 300 and 850. 850 is an excellent credit score. How is a credit score calculated? 30% is based on the amount you already own. This might be a credit card balance, a car note, or mortgage. If you, for example, have a $1,000 credit available to you and you use most of it, the bank will consider you overextended, and this will negatively affect your credit score. 35% is based on payment history. This is determined by making payments on time. The payment history is the most important factor of a credit score. 15% is based on the length of period you've had a credit account. A long credit history is a positive thing for your score. 10% is based on credit mix such as retail accounts, mortgage, and credit cards. You do not have to have one of each. 10% is based on new credit. If you open several credit cards in a short amount of time, that will mean that you have an increased credit risk and will affect your score negatively. Why do you need a credit score? A lot of places run your credit before they can allow you to sign a lease. It will be hard to get a mortgage if you do not have a credit score. Your interest rate on your car note is likely to be much higher if you do not have a credit score. There are many Americans who do not have a credit score or they have a poor credit score. Lack of credit score or having a poor one can affect your journey to financial independence if you're paying high interest on your credit card or your car note. Building a credit score. It's important to start building your credit score as soon as you can. If you already have a credit balance, make sure you pay on time. If you have a credit card and you happen to open a new one, do not close the old credit card to prevent a reduction on your credit history length. What to do if you don't have a credit card? Start with applying for a credit card through the bank where you hold a checking account for your daily banking needs. Also, going to a local credit union is a good option. Depending on your credit risk, the bank may only offer you a secured credit card. To get a secured credit card, the bank will require you to make a deposit. If you do not make a payment on time on the balance owed on the credit card, the bank can use your deposit to cover the amount owed. Important points to note. Credit card interest rates can be 24% or higher. If you do not pay what you owe on time, your balance will continue to increase and you may never be able to pay back. This will in turn damage your credit history and make it even harder to borrow money in future. Therefore, do not get a credit card if you do not have the discipline or the resources to pay what you borrow. Strive to pay all of your credit card balances every month. This will prevent you from paying any interest. If you only pay a minimum balance, you will end up paying back more than you borrowed. How to know your credit score? Check if your bank provides you with a free credit score. Your credit card company may provide you with your updated credit score on a monthly basis. Credit Karma is one of the apps that provides you with your credit score for free. Again, thank you for watching. Please subscribe and share. Until next time, bye bye.